welcome you with us here on Business Today. I'm Abha Bakaya. Here are the headlines tonight. Inflation rockets to a 16-month high. Consumer inflation rises by a whopping 6.95% in March. Food prices up nearly 7.5%. March CPI above the RBI target. A day after the Modi-Biden virtual conference, Russia no longer on Indian Oil's crude oil map. Reports say Russian crude removed from the company's latest import tender. Sri Lanka defaults on its entire $51 billion external debt, says will use its remaining forex reserves to buy essential commodities, not service its debts. Sensex falls for second day, drops 388 points. Nifty ends below 17,550. Metals, realty stocks drag. Banks gain. And India kicks off the process for the mega auction of 5G telecom spectrum for mobile internet speeds of as high as 20 Gbps, expected to fetch the government up to 7.5 lakh crore rupees. Official numbers have confirmed what the Aam Aadmi knew all along, that prices have shot up in the past couple of months. According to the National Statistical Office, consumer inflation in March touched a 16-month high of 6.95%, much higher than the upper limit of 6% set by the RBI. The increase has been led by edible oils, which rose by nearly 18% in March, and by vegetables, which were costlier by more than 11%. The rise in food prices were nearly 7.5% in March. The big reason for this massive spike, a steady increase in fuel prices, a part of which will have an impact in April as well. Siddharth Zarabi, our managing editor, joining us now. Siddharth, this rate hike has seemed that, long overdue given the current environment. But we all also know that growth continues to be a priority. The RBI did say it would try to be as accommodative for as long as possible. It doesn't seem that they're going to have much room left.
Well, that's absolutely correct. And in fact, this number, the fine print really tells us that food prices are now going to rise further, because remember, we have a hot summer happening, and that also feeds into certain kinds of food related inflation. The fuel price hike seems to have been temporarily stopped once again, because we now have several days of the hike not happening, the daily 80 paisas that was happening. The total increase is 10 rupees, and that will get passed on. What this effectively means for the Aam Aadmi is that the government now faces a twin challenge. How does it use the instruments available before it to cool prices of select and sensitive food commodities, including edible oils that you just mentioned? That doesn't happen easily. The second is vegetarian protein. The third really would be the entire ecosystem of transport-driven inflation. So if you keep going into it, this will be a Aam Aadmi inflation. Elections behind us, but the future, as far as the RBI is concerned, will be the key thing to watch out for, Abha. And as you know, the first meeting of the MPC for the current fiscal said what it had said, was actually hawkish in tone. But the June meeting is now where everyone's eyes will be. How much will the RBI raise interest rates by? Will it be 50 basis points or even more? Because inflation with this number is far beyond the upper end of the tolerance limit. And people keep saying 6%, but it's actually 4%, which the RBI has in terms of the mandate, with a margin of 2%. So this is, well beyond even the margin. Effectively, we will see the RBI now move towards inflation control from the past 2 years of supporting growth. Abha?
All right, that's the important takeaway as we closely keep an eye on the next move from the RBI in light of these spiraling prices. So that's Zarabi joining us on that headline. Industrial production, meanwhile, has seen a slight increase in February. The index of industrial production rose by 1.7% in February versus 1.5% in January. The manufacturing sector rose by 0.8%, electricity production by 4.5%, and mining also by 4.5%. Industrial production during the April to February period rose a healthy 12.5%. Indian Oil has reportedly removed Russian crude oil from its latest tender. According to news agency Reuters, Indian Oil has excluded several high-sulfur crude grades, including Russian Urals, from its latest report. Reports say that Eugene Island, Thunder Horse and Ural crude were no longer on the list of grades under its tender, which closed today. Indian Oil has imported 6 million barrels of Russian crude in March at a discounted price. HPCL and MRPL are the other Indian refiners to have bought Russian crude. The latest move comes hours after a virtual conference between Prime Minister Narendra Modi and US President Joe Biden. External Affairs Minister S. Jaishankar, who is in Washington, D.C. with Rajnath Singh for bilateral talks, had just yesterday rejected US demands that India stop importing crude from Russia.
If you are looking at energy purchases from Russia, I would suggest that your attention should be focused on Europe, which probably we do buy some energy which is necessary for our energy security. But I suspect, looking at the figures, probably our total purchases for the month would be less than what Europe does in an afternoon.
Crisis-stricken Sri Lanka has defaulted on its $51 billion external debt, calling the move a last resort after running out of foreign exchange to import desperately needed goods. The island nation is grappling with its worst economic downturn since independence. My colleague Sakshi Batra is standing by with more details of the crippling economic situation in Sri Lanka.
Well, that's right. Sri Lanka has suspended its entire foreign debt payments to save money for food and for medicines. In fact, this is the worst ever economic crisis that we are looking at in Sri Lanka in memory that we've seen. The entire $51 billion external debt has been suspended by Sri Lanka. The crisis-stricken Sri Lanka has been unable to repay its entire debt. Of course, this is a temporary suspension to avoid a hard default, and this comes right ahead of the pending IMF bailout as well. Remember that defaults on the entire $51 billion external debt is a serious and a critical situation that Sri Lanka has landed itself in. We are already seeing that its foreign reserves have now slipped almost 16% in the month of March and now stand at $1.94 billion. And that is a critical situation as well. Sri Lanka has sought debt relief from India and from China, but both the countries instead have offered more credit lines to Sri Lanka to buy commodities from their respective countries as well at this point in time. Remember, China and Japan hold 10% each of Sri Lanka's foreign debt, and when it comes to India, it holds about 5% of Sri Lanka's foreign debt at this current point. It has suspended the foreign debt payments to avoid any kind of a hard default on its payments. Remember, Sri Lanka has also said that a suspension of the entire debt is, in a way, a fair and equitable treatment of all creditors at this point in time. There is limited forex reserves in the country, which are now needed to import all the essentials like food and medicines at this point in time, and which is why Sri Lanka has taken this extreme step at this point in time. The gross debt servicing would now amount to about $7 billion as of 2022, and this is most of the estimate. As against, remember, the current forex reserves are just less than $2 billion as well. Remember, the current account deficit of Sri Lanka is also currently at $3 billion at this point in time, and that is what a JP Morgan report has suggested. Remember, there is an inflationary problem as well that at this point in time Sri Lanka is facing. There is a rising inflation. It has shot up above 18.7%. Compare it with 2021 inflation when it stood below 7% mark as well. So that is a rising concern on the back of this economic crisis. Also, when you talk about the exchange rate, the Sri Lankan rupee has depreciated against the US dollar now to 310 1 Sri Lankan rupee against $1 as well. Remember, this has also, the depreciation has surged from 199 against the US dollar to 310 now. Remember, oil is also on the boil in Sri Lanka. When we are talking about the petrol and diesel prices rise in India, look at the kind of levels that we are seeing in Sri Lanka, that of petrol and diesel at this point in time. Petrol at this point in time has surged, and talk about diesel right now, 176 Sri Lankan rupee for 1 litre of diesel at this point in time in April 2022. That's the kind of surge that you are seeing. The rising food prices are another matter of a concern at this point in time. In the month of March, we've seen in Sri Lanka, food prices have shot up over 30.2%. That's the kind of spike that you are seeing, and which is why the UN crisis and the cry among the people of Sri Lanka at this point in time, and the protests against demanding resignation from the current government. Sovereign debt defaults have not just happened in Sri Lanka. Remember, it has happened in the other countries also before this. We've seen that for Argentina, we've seen that for Zimbabwe, for Greece, and many other countries starting right from 2004 to 2022 now.
India's telecom regulator has kick-started the process for an auction of fifth-generation radio spectrum with a set of recommendations to the government, including a steep 58% cut in the reserve price of the prized 700 megahertz band spectrum. So what do these recommendations mean for the advent of 5G services in India? Here's more on the story.
Fifth-generation services are the future of mobile broadband and promises to enable a new kind of network capable of connecting virtually everyone and everything, including machines, objects and devices. A 5G mobile network can be significantly faster than 4G, delivering up to 20 gigabits per second peak data rates and 100 plus megabits per second average data rates. It is this future that the TRAI is now preparing for with its latest recommendations on the auction of 5G radio waves. According to TRAI, 5G recommendations have been framed after careful analysis following stakeholder consultations and wide discussions. Following industry demands after 2 previous auctions saw a tepid response, the regulator has now proposed a near 39% reduction in the reserve price for the sale of spectrum. Industry had made it clear that unless the price is reasonable, the auction would not work.
If the spectrum pricing remains high, we will not be able to buy spectrum. I'm hoping this time around, the TRA recommendations will be rational.
The watchdog has recommended a mega auction plan of over 7.5 lakh crore rupees for over 1 lakh megahertz spectrum in case government allocates it for a period of 30 years. In case of 20 years, the total value of the proposed spectrum auction will stand at around 5.07 lakh crore rupees at the reserve price, according to the back-of-the-envelope calculations. With large swaths of spectrum remaining unsold in the last 2 auctions, TRAI has advised the government to sell airwaves in the 700 megahertz as well as 800, 900, 1800, 2100, 2300, 2500, 2600 and other high-frequency spectrum bands. Industry experts say Reliance Jio and Bharti Airtel are well placed to participate in the auction, with the expensive 700 MHz band likely to see significant demand. However, it remains to be seen whether the government accepts these recommendations and what industry chooses to do after the reserve prices are finalized by the Department of Telecom. Bureau Report, Business Today Television.
Markets ended in the red for a second straight session. The benchmark indices managed to end sharply off lows as private banks reversed losses in the second half of the session. Nifty ended below 17,550 after slipping 144 points. Sensex 2 shut shop at 58,576 after falling 388 points. Broader markets also bore the brunt of selling pressure, with mid-cap and small-cap indices declining over 2% each. Losses in oil and gas and metal shares pulled the headline indices lower. But 450 points recovery in the Nifty Bank limited the downside. Investors lost 3.2 lakh crores in wealth today. Hindalco, Coal India, Tata Steel, Tata Motors, Grasim among the top laggards in trade. All these shares skid between 2 to 6%. And here's what else is making news in the corporate world. Ride-hailing service Uber India has raised trip fares by 12% in Delhi NCR amid a recent spike in fuel rates. The fare hike in Delhi comes after it increased cab fares by 12% in Kolkata and 15% in Mumbai, citing the same reasons. Biba Fashion has filed IPO papers with SEBI. Investors like Warburg Pincus, Faring Capital will be divesting their stakes in the company. As per the DRHP, the IPO will comprise of fresh issuance of equity shares worth 90 crore rupees and an offer for sale of 2.77 crores. Mahindra Lifespace announced the launch of the country's first net zero energy residential project, Mahindra Eden in Bengaluru. Company will be investing 500 crore rupees in the project. They also announced it will develop only net zero housing projects from 2030 onwards. Global IT and consultancy major Infosys announced the opening of its Melbourne Living Lab. Following the launch of its Metaverse Foundry, the Infosys Melbourne Living Lab will enable Infosys partners to test and incubate extended reality experiences and virtual reality zones. In a relief to the Australians irked by late car deliveries, Cars24 has launched its 7-day delivery service for used cars. Cars24 took to the skies in Sydney to fly a pre-owned, refurbished car for delivery to its new owners. Australians have been struggling with record wait times of up to 12 months. These overstretched delivery hold-up impacts the car buying experience. With Car24's new initiative, the order could be easily placed and financed within 4 minutes and delivered in 7 days. Let's take a very quick break on that note. Back with more on the other side.
Kilometers above Earth, the International Space Station is watching us, orbiting the planet every 90 minutes, traveling at a speed of 28,000 kilometers an hour. It was built over a 13-year period from 1998 with more than 70 Russian and American flights transporting the 100 or so components at a cost of $100 billion. At 108 meters long, the ISS is solar-powered and the living space is equivalent to a Boeing 747. Equipped with several laboratories, it's a unique platform to conduct experiments, observe the world, climate change, as well as the universe. 15 countries finance the ISS, and up to 7 astronauts stay up to 6 months, now permanently occupy it. Since 2020, astronauts have arrived in the Dragon spacecraft, powered by the American SpaceX rocket launched from the United States. Astronauts arrive via Russian Soyuz spacecraft from Kazakhstan's Baikonur Cosmodrome. 2 Soyuz craft are kept at the station to act as a lifeboat should the crew ever need to evacuate. A key stage in the human exploration of the moon and beyond, the ISS remains in use until at least 2024.
You are watching India Today.
Let me welcome in Mr. Ganapathy Subramaniam, Chief Operating Officer and Executive Director TCS, on those stellar numbers this quarter. Ganapathy, Q4 revenues up 3.2% Q on Q, 25% EBIT margins, and of course profits as well, up at 99 billion rupees. That's up 7% year on year and 2% Q on Q. Earnings well in line, of course, but we've also seen stellar growth and some huge orders in the billions of dollars. What are some of the key drivers this quarter, and how do you expect FY23 to remain for TCS?
Thank you, Abba. More and more of business is getting embedded into technology. That's the first impression and first foresight, right? The result that, look, almost all businesses, whether it is big, small, whether it is airlines or banking or capital markets or retail, they're all investing in technology, and that is the key thing to note. Whether they want to grow, they want to optimize, they want to be resilient, they want to secure, they want to participate in ecosystems. In every one of these cases, I think technology is the enabler, and they've all seen that in a pandemic situation when people could not attend office, technology actually bailed them out. Right? And I think that's the biggest realization. Second thing I will say is that we have invested in building the skills that we need on the digital technologies massively over the last 3-4 years. And we also formed specific offerings around cloud, agile, automation, intelligence, data analytics, and all of that. So when you put all these things together, then what we find is that our products and services are a lot more relevant to our customers. Right? And that's something that, you see the results of the Q4 of FY22. Extremely pleased with the way that it came out, and great to finish it like that and have a very good exit rate for FY23.
Now, deal momentum has been strong, to say the least. The key positive surprise there, the $11.3 billion TCV deal, which includes 2 mega deals. Tell us more about them, when they're going to start adding up.
Both the mega deals that we concluded, they've already started to, we have started to execute them, right? So the revenue from those deals will start to accrue from Q1 onwards, Q1 of FY23 onwards. Overall, even if you exclude those mega deals, then still, we are having about 9.5 billion as the revenue, as the order book rather. So, which is a very good number. We have been clocking about 7.5 to 8.5 billion dollars as the order book for the last several quarters. So our efforts have always been to move that median number, right, to the right. So I'm glad that we are finishing it at 9.5, and we hope to do justice to the kind of products and services that we have, the momentum that we have, and keep improving our performance in FY23.
Now, given that these deals that you've just announced will continue to contribute in the coming quarters, do you expect to maintain this kind of growth? Are you worried about the macro headwinds at all that seem to be brewing?
See, all the macro level indicators and the economic indicators that are being pointed out is something that for us to note, and we have to keep track of those indicators, how they pan out, whether it is the inflationary trend that you see or the war situation, that how it is going to pan out, or the pandemic. People say it's not over, and it's, for example, some countries are already witnessing something. But we have to keep all of that in the radar and then see. But then, at the same time, there is technology requirement, and even the toughest of situations, people now believe that business has to go on, and technology is the one which is going to help them to execute it. So in that context, that you look at our customer base, where is it that they are going? What is it that they want us to do? Stay very close to them, and then start executing some of the offerings that we have. So in that context, while macro indicators are there, the demand environment that we see is very positive. And we have signed, as you rightly pointed out, $11.3 billion worth of deals. And we see a good pipeline of deals in which we are working on. So, we just have to stay focused on what we need to do, how we need to execute it. At the same time, stay agile to see what's happening around us, right? So the overall, while I'm a bit cautious about some of the indicators that are coming to us, but what we see with our clients and prospect base that we have, there is a good momentum, and we want to capture that momentum and continue to perform well.
Okay, attrition, and that's something everyone wants to talk about, rose to 17.4%. Net additions, of course, remained high, and we've seen that consistently through the year. But do you see this kind of attrition sustain incrementally? It seems to be coming down, but what do you anticipate over the coming quarters?
And we see the attrition getting to some kind of a stable situation in about 6 to 8 months' time. That's what we hope for. That's the indication. If I see the curve and how it pans out, there is a belief that in about 6 to 8 months' time, that supply side should remain stable and demand side also should be stable. The thing to note is that we called out that this is a big investment cycle that's coming, and we started to upskill and hire a lot of people during the pandemic as well, right? And started to train all of those people, and then so that we have the skills that we need to execute the demand that we foresaw. But then, the demand environment really was really great, and then which meant that the industry as well as some of the competitors needed those trained skills. With the result that naturally TCS has those skills, so people came and started to hire people from TCS as well. But the key thing to note is that we are an employer of choice, and we continue to attract talent both laterally as well as from a fresher's perspective. The investment that we made in terms of democratizing the talent hiring, in terms of the national qualifier test, etc., meant that we have the wherewithal to hire 100,000 freshers last year, right? While we said that we'll hire 40,000 and the demand shot up and the attrition came in, then we had to hire more people. We had the database to reach out to people and bring them on board, train them and make them relevant.
Ganpati Subramanian, thank you for your time and for joining us here on Business Today. Great to hear what's in store as the company's leading tech major continues to deliver stellar results quarter on quarter and a hefty dividend as well. That's where we leave it on the show today. Thanks so much for watching.